Greetings, members, one and all of the Salivation Nation. Silver was the best performing asset class of 2020. Let's explore. I get a lot of people that misunderstand my interpretation of the precious metals. There's some people that say I'm providing mixed messages or that I'm just flat out down on silver or bashing silver or negative on silver. But I don't think that's the case. I just like to be realistic about the metal, and I'm all about praising it when it does something real, and it did in 2020. And we're going to take a look at it from different measures here. But in this particular chart, we're going to take a look about its performance against these other asset classes that are out there. Now, I don't know how they categorize these, because we're going to look in other areas and see what other aspects have done better than silver in terms of performance, if you were going to consider those an asset. Of course, I don't know that I necessarily would. And to that, I'm referring to a Bitcoin. But when you take a look at the whole in terms of stocks, on the average of all the stocks together, we can see that they didn't perform as well as silver did. So that's why it's an asset class, and silver kind of stands alone. But precious metals in general, collectively, I think did better as well too, especially when you look at rhodium and palladium. They certainly bring up the mix and help pull the other metals up greatly in terms of their performance. But let's take a look here. This chart is very well laid out at visualcapitalist.com. And as you can see by looking, you have different categorizations here. We have the maximum drawdown in 2020 from yearly open. Some of these were hit very hard, and silver was hit hard too. But as you can see, compared to some of the others, it did not get hit as hard as some of the others, but silver went below $12 an ounce. Now, that's just on paper. You could not buy or sell silver for nearly that low of a price in 2020. In fact, after that, from that low, it had a return of 127.4%, which is by far a very great recovery, although crude oil, as you can see, was hit even harder into negative territory. Crazy. So it had a larger return there. But overall, it didn't measure any kind of return for that year, whereas silver was up 47.4%, the absolute top. But the next one down is gold. And I think, in a way, gold's performance is much more impressive in terms of being that narrow of a margin between the return from the low of 2020, which saw only a 4.4% drop. In other words, gold is a more stable wealth preservation device, so that even though it had a 24.6% return from 2020, its overall return from the low and recovery was 30.3%. And that's what you want to see. And you want something that is less volatile, that just slow and steady will do its job. Gold was the metal to buy, but it did perform very well for sure in terms of nominal dollar increase. 24.6% is not a bad return. Then we look at some of these other asset classes, U.S. small caps, U.S. stocks. Obviously, these have other things in the category. What stocks are we talking about? What U.S. small caps? Emerging market stocks, U.S. corporate bonds, and the like. And so when you see that kind of thing, it's a grouping. These are classes. But silver and gold kind of stand on their own. It's essentially the market itself, the LBMA, the COMEX, and what those prices are showing there. Then we see other categorizations of stocks there. U.S. Treasuries, Canadian stocks, commodities in general. That includes probably wheat, corn, maybe other metals, copper, zinc, lead, other things. And we can see that they are hit very hard over the course of 2020 and had an 87% return. for sure. So it's interesting to see. And the U.S. dollar index, look at what happened there. It was hit hard, and essentially is kind of from its return from the 2020 low was up only a half a percentage point, but still, that means it was still down overall 6.8%, which tells us something here about what the dollar is doing compared to precious metals. I think this chart is probably one of the best cases for holding precious metals that I can think of out there, for sure, in terms of its performance as an asset class. And we see real estate, which is very interesting how real estate has been performing, because it was hit hard at the very beginning or during some of that course, but it's done wildfire overall throughout the country. I know in very different areas, the real estate market is up a lot. There's a lot of buying and selling going on, a lot more buying there. But anyways, so it's been a volatile year, obviously, for the financial markets and the participants, with some of the largest price fluctuations imaginable across just about every single asset. Despite this volatility, the combination of the Federal Reserve's early stimulus interventions and positive vaccine news towards the end of the year has rewarded dip buyers in strong hands. Among with visualizing the returns across asset classes, currencies, and S&P 500 sectors, they've included their maximum drawdown for the year. The drop from 2020 open to 2020 lows, along with the recovery from the 2020 lows to the closing price. So it helps visualize the year's most resilient assets along with the strengths of their recovery. So of all the major asset classes, precious metals provided the best returns last year. So for us stackers, that's great news. Gold finished the year up 24.6%, but down from its all-time highs of $2,075 an ounce achieved on the August 7th. Gold was also a resilient asset thanks to its strong start in January, up 4.8%. When March came around, gold held up and only fell 4.4% below the yearly open. So again, that stability with how gold performs over this time, I think is what's attracted me to gold in recent years. Why I've been focusing more in that area. That's one reason. The other is to narrow my personal gold to silver ratio. Silver's performance over the year was also sterling, offering investors 47.4% returns despite this negative 34.7% pullback in March. So here's a look at how the major asset classes performed over the course of the year. This is really the bottom line as to how they have done. And obviously there's equities, there's bonds, and commodities and real estate are the categorizations here. And we can see that silver was the top producing, the top return, gold second place, U.S. small caps, U.S. stocks, and all these things. Crude oil really was down 21.5% for 2020 overall. So fascinating indeed. And we remember when the futures for oil, WTI crude, were down $37.63. In other words, and that means that in a sense, they would pay you to take the oil to store it. That's kind of how that worked. But we know in reality that kind of never really took place, and it didn't take long to get out of that slump, for sure. U.S. government and corporate bonds had a positive year. However, their returns were primarily driven by support from the Federal Reserve's monetary policy and market operations. The Federal Reserve increased its portfolio of Treasury notes and bonds by 79% since March, with its total assets reaching $7.3 trillion by the end of 2020. So here's the S&P 500 sector. And this is quite interesting indeed. The energy sector was hit the hardest last year, with value sectors generally struggling to perform compared to growth sectors. So you can see where these numbers lie. Fascinating indeed. And IT is top in terms of the 2020 returns. And it makes sense with Zoom and the like. We're going to see that here down, and to see how these others. And then foreign exchange performance, the Australian dollar was the best performing currency out there in terms of being how they operated and how they performed. Early on in the year, major currencies generally followed similar patterns as they all fell against the U.S. dollar in March as flight to safety. And that was the point of the Path to $12 silver video. the dollar is and can be and could be again a flight to safety, and we could see the same thing happen again if there's another panic. And it doesn't have to be the coronavirus this time. It could be something else. And likely it probably will be the next time. Swiss franc was one of the most resilient currencies, drawing down only negative 2.1% from the 2020 open. It was also one of the best performers at the end of the year, alongside with the euro and Australian dollar, with a gain of 9% or more. And we can see there the dollar, this Australian dollar, Swiss franc, and euro. So look at that. But the US dollar index didn't fare so well. Interesting indeed how that is. But that being said, about the performance of the dollar, it is the most, still the strongest, even though it didn't perform as well. It's the most trusted out there. They said they've omitted Bitcoin to avoid skewing the chart. The cryptocurrency had a maximum drawdown from 2020 open of 46.2%, 300% return overall for the year, and returned 651% from the 2020 low. But they did it to avoid skewing the chart, but it's not. I guess it is a sort of a currency, right? It is used as an exchange. It's just not backed by any government. So fascinating indeed. Now, let's look at the winners and losers of 2020, which overall gives us probably a broader picture in terms of investments and the like, not just asset classes out there. But you can see from this, and it makes perfect sense, that obviously these vaccine companies, propped up by government spending, obviously, are going to be the highest, some of the highest, especially Novavax here, over a 2,731% increase. Tesla did very well. Moderna, Zoom, makes no surprise there about Zoom stock going up with all these meetings. But Bitcoin, look, 303% there. So quite a good jump there for Bitcoin, as we all saw there. And the dollar index was a loser here, and for the loser column, but Carnival Corporation took the biggest hit, and that's of no surprise considering what was going on. Energy stocks took a hit, and so did Air Canada's and WTI crude oil. So there you go. Here it says Bitcoin broke well beyond its previous all-time high, returning just over 300% from the 2020 open and more than 650% from the lows. Tesla had an even more spectacular run, earning 745%, which made Elon Musk the second richest man in the world, and I think he's now the richest man in the world now. But very interesting indeed. So that is kind of where things are. But again, the big news of this, and it should encourage silver stackers especially, but understand that just because it's the best performing asset of 2020 does not mean that it will be that in 2021, but it could mean that it could. There's a lot of I think, bullish news for silver. The Green New Deal, or some sort of increased spending for environmental, EVs, electric vehicles, solar panels, and the like, technology, a recovering economy, more money spent for electronic gadgets is going to require more silver. And then we have this silver squeeze, which is still in effect, but not as intense as it was before. I think we're going to see probably silver continue to do well. Will it be the top performing asset in 2021? I don't know. But its volatility could be as such that people could be disappointed if they see the spot price maintain where it is, even with increased premiums. We'll see how it plays out. But nonetheless, it is a fascinating time to see where things are going with the metals, especially in these asset classes, how they have performed so well against these other asset classes out there. Let me know your thoughts in the comment section below. Would like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.